All right, now that the salary has been paid, what do we do? Remember, the first journal we passed was when the salary was not yet paid. The payroll was only being approved, right? So now the salary has been paid. What are the entries to make? We are still going to locate our general journal entries. So to do that, I'm going to go to company, all right, and click on make general journal entries on QuickBooks. Make general journal entry. So once I click on make general journal entry, this journal portal will display. All right, so this is indicating this is the date. You enter the date. All right, you enter the exact date, so I'm choosing, let's say I'm choosing today. All right, I'm choosing this date. Now the journal number. All right, remember we have created about 2 journals on this system. Now this is the third one, so that is why automatically it is bringing journal entry number 3. All right, so to do this, now this is the case where the bank account is being affected. All right, this is where the bank account is being affected. Now before we can go into remittance of either pension or tax, all right, that were deducted, the first thing we should pay our employee. It is until the employees are being paid, that is from the date where the remittance is beginning to read either due or not. All right, so the first thing to do is I'm going to look for my salary control account, because that is where the employee salary is being held. All right, salary control account. Remember that I credited salary control account initially with the what? With the net salary. All right, the net salary was 2,506 383.33. Okay, I need to enter that properly. 2,506 383.33. All right, so this was the salary, this was the net salary that we credited to the salary payable account. So right now we are going to debit it back. Remember that we credited it. Now that we want to debit it, it will render that salary payable account to become what? Zero, just like I explained earlier. So right now, where is this money coming out from? Which is it, cash they are paying or through bank transfer? In most cases, right, it is a bank transfer, either through the online banking platform or through individual transfer or whatever it is. So long as the money is coming out from the bank account, I'm going to select the bank. Which of the banks? You might have more than 5 banks that you are using in your company, so we are going to select the exact bank that is effecting this payment. Okay, let's say the salary account, the bank is what? Zenith Bank. I'm going to select Zenith Bank and I'm going to credit Zenith Bank with the exact amount that is leaving to the employee's account, which is 2,506,383.33. Right? Now, this has completed the principle of double entry, which says for every debit entry, there must be a corresponding credit entry and vice versa. All right, I've credited the bank account where the money is coming out from, and I've debited the salary payables account. All right, so where the money is going to. So once I do this, I'm going to click on save. All right, I'm going to click on save and new, or save and close. Save and close if I don't want to pass any other journal. Then save and new if I still want to pass other journals. So now I want to click on save and close. Why? Because I want us to go and see the effect on the statement of financial position. All right. So I'm going to click on save and close. So if I say save anyway, it has saved. So now let's go and check the statement of financial position. You go to reports, and you go to company and financials, then you go to balance sheets standard. All right, so it has displayed. So if you go to the liability columns, you discover that the salary payable account is no longer here. Why? Because the salary has been disbursed to employees. All right. However, we still have pension payable and tax payable. Okay. So once we are remitting, once we are ready to remit this pension and we are ready to remit this tax, all right, we are going to perform the same journal. We are going to go to company, go to make general journal entries, all right, and select the account to debit and the account to credit. So in this case, all right, we are debiting all the liability account and we are crediting the account which the money is coming out from, which is most likely the bank account. So the first that I want to is the tax payable. Remember that was where we kept the tax that was deducted. So tax payable account, how much, the exact amount that was credited to that tax payable account is what we'll be debiting, which was 253,616.67. All right. I want to also remit the pension at the same time. All right. I want to remit the pension at the same time without wasting. No, let's do it individually. The benefit of doing it individually is so that on your bank statement, all right, the figures will appear solely that this is this figure for that left for tax, this is a figure that left for employee salary, this is a figure that left for pension. But if I pass this journal together, a lump sum will be leaving the bank accounts, and I don't really want that. Okay, though it's not a serious issue like that, but however, for clarity, all right, for clarity and simplicity of account, it is just best that because even sometimes we don't remit them at the same time. Yeah, we don't remit all of them at the same time. We might decide to, depending on the load of work on your decks, because before you remit tax payable now, you need to log on to, if you are using the lrs.net, you have to log on to the LRS tax portal. You need to generate your credit notes, and sometimes the site might not be functional, and that's the same process with other states. All right. And yes, once you do that, you can now, so sometimes I know that they are not being remitted at the same time. They all have their different remittance deadline. All right. Okay, so I want to do it individually. So I've debited the tax payable account. Now I'm going to credit the bank account, which is a Zenith Bank. All right, which is Zenith Bank. So the memo can be tax being tax deducted from employees' salary, now remitted to the relevant tax authority. You are going to put the relevant tax authority. I don't know if it is Lagos State, maybe it is Ogun State, maybe it is Zamfara, maybe it's Akure. You are going to put it there. So after you have done this, you just click on save and close, and click on save anyway. Now it has saved, right? So I want us to still go and check the effect on the statement of financial position. Can you see? Remember how I got here? I went to reports, I went to company and financials, and right now I'm on balance sheets. Okay, so right now the balance sheet has displayed, and go to the other current liability. You discover that tax payable is no longer there. Why? Because it has been remitted. Okay, now that it has been remitted, now you are going to generate any credit note or a receipt, as the case is. If you took it to the bank is going to pay directly through the what's it called, the bill of reference, that you have generated. There is a code, there's a number that has been included there. Once they paid, you are going to give you a printed receipt, or if you did it directly from your decks, all right, you are going to print a receipt right from the portal. So that is just that. And lastly, I want us to pass the journal for the pension. Let's say we are now ready to do what? To remit the pension. So we're going to pass this entry, such as you go to company, go to make general journal entries. Okay, make general journal entries. I'm going to select, all right, pension payable. Remember, I created pension payable with the pension that was deducted. So I'm still going to go to pension payable and debit that same amount. All right, 240,000. I've debited it. All right. So where is this money coming out from? Of course, It's coming out from the bank account. So you're going to select the bank account through which you used to make this payment, which explains for every debit entry, there must be a corresponding credit entry and vice versa. And after you have done that, you click on save and close, right? You just click on save anyway. All right. And lastly, let's check our report. When we check our report, we will see that let's go to balance sheet. So the first thing that I want to establish is that, can you see that there is no salary liability here any longer? There is no pension payable, there is no tax payable, there is no salary control accounts here any longer. They have all been nilled to zero. Why? Because we have completed the process. At the same time, if you go and confirm in your statement of profit or loss, all right, in the statement of profit or loss, you will see that the exact salary has been recorded, because the amount that the company is spending for salary is a gross salary. It is just that according to the statutory requirements, we are mandated to deduct and remit to the relevant tax authority. However, it is the employee that is suffering the burden of the deduction. All right. All right. So we are just to remit. So we have to record the exact gross salary, the total gross that the company is spending as expenses for that period. So this is the easy peasy process of passing salary journal or recording your salary when the payroll is being approved and after the payment has been made to employees. I hope you understand and you enjoy the class. Please kindly click on the subscribe button, like, comment, and share this video for